Danielle, you're from simplertrading.com, and as Tom was talking about, you primarily do options. So we're definitely interested in hearing more about that.
Yes, that's correct. Well, thank you for having me. Awesome. So what I'm going to be doing today is a little bit of a mashup. So I'm just going to do a quick presentation just about my trading style overall and myself so you can get to know me a little bit better. And then I'm going to go ahead and flip over to some live charts and show you some live examples. All right, so first of all, the topic of this presentation is when the switch happens. So as an options trader, I trade on a much shorter term time frame probably than stock traders. I typically will stay in a trade anywhere between about 1 day and probably about 3 weeks at the max. I do have a long-term stock portfolio, but primarily I am an options trader. So I'm a strict technical analyst. I do a lot of Fibonacci, so that's really important as far as my trading strategy is concerned. And I really focus on top-down analysis, just like y'all were doing right there. So I start primarily with the sectors and indexes and then narrow that down to various stocks that I like, and then I trade those on a short-term options basis. So it's just a little bit about me. I used to be an elementary school teacher. That was me 6 years ago, living in Costa Rica. That was my 6th grade class. And then my father got me into options trading. So I went straight from teacher to options trader. And then, now I ended up teaching others how to trade options. So it works for me. I'm really happy that my dad got me into it. And that's what I do now. So as a trend follower, I am primarily a trend follower, but as we know, the market has been pretty volatile lately. So that's why I have incorporated now into this presentation the switch. So just so primarily what I do is trend following, and this is what I call the 5-star setup. It's based on the top-down analysis. Like I said, you start with the indexes, sectors. I work to identify the top 3 sectors, both going to the upside and then to the downside. And so I'm heavily shorting the weaker sectors and long the stronger sectors on an options basis. So all of this analysis is done on the underlying stock charts. And then from there, I work on identifying what is the option, my favorite options play. So primarily in a trending market environment, I focus on the 5-star setup. These are the 5 stars of my setup. Number 1, I work to identify a solid trend. Number 2, the chart must have some underlying Fibonacci analysis that aligns with the trend. Number 3 is going to be a squeeze. So this is my favorite indicator that I use that comes from my primary trading mentor, John Carter. Squeeze is really just a high probability moment in time to jump on a trade. So you're basically just looking to identify consolidation on a chart, and then you want to get in that trade before that consolidation breaks out. And that's how we make money in the options market, because in options, the only way you're going to make money is if you get in before a greater than expected move. So that is the key right there.
Danielle. A couple things. First, I just want to clarify that you're not talking about a short squeeze, right?
No. So we do trade short squeezes as well. But no. So what this is let me show you. I can show you live
where
chart.
You might see the Bollinger Bands narrowing, where you haven't really seen a whole lot of action. You're expecting a much bigger move.
Yes, that's correct. Bollinger Bands and Keltner channels. And this is the way that it populates right here in my Thinkorswim. I use Thinkorswim for my charting, and this is a free tool in Thinkorswim, but basically it is a combination of the Bollinger Bands and the Keltner channels, and it populates by these red dots right here. So what you're doing is you're looking to get into a trade right about during this time before the squeeze fires. When the squeeze turns from red to green, that is when it's firing. So for example, during this time period, I'm getting short Baidu, and then the squeeze fires, and then boom, there it goes to its target. So that is that is what we call the squeeze. But I do also trade short squeezes to the upside during an uptrending market as well.
And when you get into one of those periods where the stock isn't really doing a whole lot, I'm assuming that as that Bollinger Band narrows and so forth, is it also true that maybe the spread on those options would be less because we're not seeing the same amount of volatility? Is it?
Yes, that's absolutely correct. So you want to get into it before it moves when the volatility is lower, because once it starts to move, I mean, that's the point where you're really chasing and you don't really have as much of an edge in that moment in time. So yes, that's exactly correct.
Okay, thank you.
Yeah, of course. So pretty much, you know, the majority of my trades are all going to incorporate a squeeze. I will trade just trending charts that have some fib analysis, but especially for options, you really need that explosion in price in order to make money. The fourth thing that you really need is a solid entry point. So you have to get in where you have an edge. This is going to be a sufficient pullback. And I determine that on a technical basis. I like to use, like I said, Fibonacci and generally about the 34 to the 21 EMA. And then the fifth part, this is the one where it could be a short squeeze. So for example, if I have a ticker, I think MDB was a good one lately, that it has a trend, it has a Fibonacci cluster, there's a daily squeeze, I have a good entry, and then the fifth star is what brings a setup from 4 stars to 5 stars, okay? This is the fundamental backing, or it can be something like a short squeeze. So what that is it's a setup that's a setup in and of itself. Without all of these other 4 factors, it's something that is already a high probability setup. But when you add the 5th factor, that's what brings your setup from good to great. So something like the stock being in a strong sector, just like you were talking about with Pfizer. So, I mean, healthcare has been relatively strong. And we have something where Lilly is very strong as well. So we have a strong stock within a strong sector that are both moving higher. That would qualify as a 5-star setup as long as it has all of the other 4 criteria. So that's primarily what I look for in a trending environment. We do still have some of those in this current environment, but right now what I'm really looking for are the shifts and the trend shifts. So, you know, this year, obviously, we've had a high level of volatility, and we're not in a trend environment right now. So what we need to do is we need to learn how to recognize when the trend shifts. We got to know the formula for the shift. And then the second part, especially when you're a shorter term trader, is, I don't know about you guys, but it's been a lot more volatile and stressful lately. So we have to tame our trade monster. So that's just really the mental shift that you have to, that you really have to work on to keep your head in the game during this volatile times. So number 1, what do we do when the shift happens? Master the technicals. So my favorite tools are going to be the Fibonacci extensions and retracements, the moving averages, and the grab candles, like I just showed on my live charts right here, and I'll show you some more examples. These were actually created by a colleague of mine, and we give these out for free, but it's just the colors of the candles. So the colors of the candles populate in a specific way based on where they are in relation to the moving averages. And the colors of those candles really help you identify when a trend shift has occurred. So when I say grab candles, that's what I mean. Those colors, those colored red, blue, and green candles. How many of you are familiar with Fibonacci? Do you all do Fibonacci a lot?
We talk about it occasionally on here. I mean, it's not a regular part of the show, but yes, we will pull it up from time to time, especially if it lines up with other technical indicators that we talk about more frequently.
Okay, awesome. Great. Well, I've worked pretty closely with Carolyn Borodin, who's the Fibonacci queen. And so the reason why I love it is just because, you know, stocks are going to ebb and flow, right? And so the best way that I have found for me to measure it is through Fibonacci analysis, particularly measuring symmetry and measuring similarities of prior swings to kind of just determine where I think the market is going from there. So here's just a couple different examples from when the market has shifted this year. This is a S&P futures chart. I primarily reference S&P futures, Dow futures, and NASDAQ futures because I like to look at the charts that include the overnight action. I don't trade a lot of futures, but I usually always start my top-down analysis with the S&P futures chart. So it may look a little different than the SPX cash, but that's really what I use. So if you look at this S&P daily chart, I mean, we all remember these time periods, right, that have happened this year where these shifts in trends have occurred. So if we go back and we look at it through the lens of Fibonacci, we can see that these key reversals came in at key areas of Fibonacci resistance, which come in the form of retracements or extensions. So for example, this last one right here, we had this fall that started in the beginning of October. And in Fibonacci, the 618 and the 786 retracement levels, these are key areas of resistance. And so we always are looking for the market to pause at those points. So when the market traded off the low, it traded directly up into 28.15, boom, and down she goes again. So even though I don't really trade the S&P futures a lot, I'm always looking at this to determine what other trades I want to have on. So for example, if I can see the S&P futures are failing at key resistance on a daily chart, that tells me, all right, well, what other tickers can I look at to short right now? Because if the whole market is headed lower for the next couple days, what I want to do is I want to identify stocks that I can short for the next few days that go with the overall trend of the market. So for example, on this day, that was the beginning of November, the ones that I identified were shorting the spiders, the Qs, Facebook, as well as Alibaba and the financial stocks, because those were the weaker links while the overall tide was going to the downside. So,
hey, Danielle, there was a question that was in the room, so I thought I'd just pass it along to you. And the question said, is buying a put better than shorting a stock since it involves less risk? Do you have any thoughts on that?
So for me, it comes down to really the size of your portfolio. I got into options trading because you can trade options with $10,000, $15,000, $20,000, whereas it may not be as effective to trade stock with low capital like that. So for me, it comes down to really what you have to work with and how much leverage you're willing to have. So when you buy an option and when you buy a put, yes, you do have less risk. I mean, depending on the sizing, of course. So for example, if you wanted to buy a put on Facebook, it would cost you, if you wanted to buy a put on, let's look at one. So let's look at Alibaba. Alibaba is one of the more expensive ones. But if you wanted to buy a put on Alibaba, it'd cost you maybe, let's see, the way I would do it anyways, it would cost you about $10. So $1,000 for one put on Alibaba. That would be about 23 days till expiration. So yes, you could short Alibaba with $1,000, but it is significantly more leverage than stock. So, I mean, it just depends like what what you're willing to risk. So if you short the stock, I mean, it's not going to move nearly as much as the put. Does that all make sense?
Yeah, and maybe to those that are not familiar with options, one contract equals 100 shares. So if they were doing the math on that $10 costing $1,000, they might have a problem. But just remember, one contract gives you the right to buy or sell 100 shares of the stock. So you always take that price times 100.
Yes. Yes. Thank you so much. And so for me, I mean, we do different option strategies, all just buy puts. I like a lot of butterflies. Those are cheaper. I also do credit spreads, debit spreads. There's a variety of option strategies that you can do to make your trades cheaper. But I usually just do this on a very short-term basis too. So generally about, like I said, 1 day to about 3 weeks. So anyhow, going back, I mean, these are just a couple different examples. This is the March correction that was failing at a March correction that failed at a 786 retracement level. So this is why I always start out my analysis with the futures charts. Moving on to a specific stock chart, Alibaba is one that I've been shorting regularly for the past couple months. Previously, Alibaba was one of my favorite 5-star trades to the upside where I would trade these swings higher. But then what happened was when it hit the 211 high, that was right at a 1272 extension level. And the switch happened right about here. So what we have is a combination of price, number one, hitting the 1272 extension. Number two, price falls below the moving averages right here. And the moving averages are now resistance instead of support. Number three, the candle shifted from green to blue to red right about here. And then additionally, you have the entire macro story, right? Because Alibaba is one of the chief Chinese internet stocks. We have trade wars with China. The whole market, the K-Web in China is headed lower. So that is what brings it from a 4 to a 5-star setup, because it has that macro fundamental backing. And the entire K-Web is headed lower, the basket of Chinese internet stocks. So I look for Alibaba to go along with it. So with this one in the options market, I mean, what we do is we look for it to retrace back up to these areas of resistance. Short it here, short it here, short it here, short it here. So like you said before, I mean, you can do that with stock. You can do it by buying puts. With Alibaba, it's more expensive, so I prefer to buy put butterflies on it. It just brings your cost basis down. But that's just basically an example of how I go about that. The Facebook trend shift is, pretty obvious on this one, as we had the break with earnings. But it's the same thing. You just follow the rule set and you identify your trend shift. So just have to remember, these are the 3 key factors that I use: retracements, extensions, price in relation to the moving averages, and then candlesticks. I also like to use, wiki tops, wiki bottoms. The second part of this, and I'm not going to get into this one as much just because I wanted to go over make sure I had some time to go over the live charts, because I am noticing a lot of trend shifts today in particular, even though today is a Fed day. So I do want to be cautious, especially in the options market. You really don't want to be super leveraged before a major Fed decision because things can change very quickly. So the second part of this is just learning how to tame your trade monster, because especially in volatility, it can be especially difficult to sit through the ups and downs. So your trade monster is basically the part of you that escapes when you let it, causes you to lose money in trading based on improper decisions that you make. You're being too emotional, doing things like this. You're buying without a setup. You're buying at the highs. You don't have risk management. You have extreme euphoria. You're bragging about your trades. You're forgetting that Mr. Market's in charge, not you. You're forgetting that you don't know what's going to happen next. Anybody experienced any of these feelings before?
No, I don't know what you're talking about, Danielle.
I was going to say, is that rhetorical?
Yes, and absolutely. I have times where I know I need to tame my trade monster, and I'm getting a little bit too excited, getting a little bit too clicky with the mouse. And that's when you really need to pull back, understand you got to tame your trade monster, and follow these steps. You have to work on your focus, work on your emotions, and work on self-improvement. So I have a whole, presentation about how I do those, but I did want to make sure that I have time to go through the live charts with you. So, basically when it comes down to it, I've had different time periods in my life that have been much worse than others as far as trading is concerned. I think the one of the craziest times for me was last January, actually, because as a directional options trader, I just got so euphoric last year, 2017, January 2018, with the market just trading straight up, right? You get so used to making money every day and feeling like, oh, nothing bad is ever going to happen and the market's going to go straight up forever. And then of course, what happens, right? You have a January correction. So always want to make sure that we're sticking with trading plan, working to manage emotions, and sticking with technical setups. So let's go ahead and go over to the live charts.
When you buy these options, are you typically looking for in the money options or out of the money options, and what's your rationale there?
So yes, primarily always in the money options generally, because in the money options are going to hold their value a lot better than out of the money options. They are more expensive, but they hold their value better. So right now with the market environment that we're in, because of the high volatility, it's actually a lot better to do things like buy butterflies or sell credit spreads in the options market. Buying options right now is a little bit more difficult just because the volatility is so high that increases the price of the options, and because of the volatility, it's a lot more difficult for anybody who's not accustomed to trading options to sit through the swings, because the swings have been rather violent. Mm-hmm. So right now I'm focusing more on butterflies and spreads. But, right now, what I'm noticing in the markets is just that I have, and, very similar to what all of you were saying before I got on, is that we have a lot of oversold buys coming up. So here's the S&P futures. Here's my area of support at 25.15. And I'm noticing this is another indicator that I use. It's called the Ready Aim Fire, but I also use the VZO volume zone oscillator. These are just two different indicators that I use that determine when a good shift is happening. So for me, and keep in mind, all of this needs to be reevaluated if there's a crazy Fed decision. But as of right now, I'm looking at a shift in pattern. I've got the S&Ps that have now sold off for a little over a week and a half, came down to primary support, and we're trading off of the lows. So what this tells me is that the larger overall basket, and I like to go down to a lower time frame chart as well, because you can see the shift happening here, especially with the colors of the candles. Let's go ahead and erase that one. So you see how the candles are going from red to blue to green. And you also have, obviously, your low holding. This is a moving average cross right here, 830. I use the 8 and 34 exponential moving averages that are crossing right about here that tell me that a larger trend shift is taking place, and it's starting out on the lower time frame charts. And ideally, that'll bleed into the larger daily chart, and we can get a few day rally in the S&Ps that I could potentially trade higher in a couple of these key stocks. The other sectors that I'm looking at for an oversold buy, and keep in mind, like, as a trend follower, I hate counter trend trades, but this is what I'm seeing right now, and I'm looking for money flow going in and out of varying sectors and where the next area of money flow may be. So with XLF financials, of course, these have been just completely hammered, right? But I have a key area of support. I have reversal signals, and it looks like at least we could trade it back up into the mean. Financials, industrials, and transports. I mean, these have really been weighing heavily on the markets with their downtrend, and you can see where the shift in pattern happened right here. And at this point, it is, for me, a counter trend buy back up at least to the mean. Now, just because the shift is happening, it doesn't mean that it's going to magically turn around and turn back into a bullish pattern. But at the very least, what I'm looking for on all of these charts, starting out with industrials, financials, and transports, is I'm looking for the first signs of a shift. And if, which is a big if, because the market's very bearish right now, if we can breach through these final areas of resistance and resume a bullish trend, that is what I want to see. So IYT is the next one I like to look at. I like to look at IYT, the ETF, the transportation ETF. This one really leads the market to tell you, which direction the overall market's going. And I'm seeing the first little signs of a possible reversal back up here. Going on down to specific charts. So for example, like we go to, I'll start with the NASDAQ, right? So the NASDAQ has been stronger than the S&Ps. And then I look for relative strength buys within the NASDAQ. So we're starting to see the NASDAQ hold off of support, just barely, right? It's just starting. And you can see that on the lower time frame charts here. You can see the little shift coming through. But then that leads me to key players within the NASDAQ. So Microsoft is one of my favorites. And I had yesterday a key area of support on Microsoft at 101.69 to 102.29 that hit and held perfectly. And now today it's trading off of that area of support, which you can see through the lower time frame chart.
Hey, Danielle.
Uh-huh.
There was a question in the room that was asking how you find what scans do you use to find candidates? I know you just went from the NASDAQ, which you said was a relative outperformer, and then you found Microsoft. But how do you actually make that move from NASDAQ to Microsoft? Is it based solely on Microsoft's chart, or is it their relative performance to that index that you're using? How do you scan to drop down to those individual stock candidates?
Yeah, sure. So let me get you up let me get that out of there real quick.
And I don't want to cut into your presentation, but we do have the questions, and we can always...
No, it's okay. I love the questions.
Yeah, we'll definitely have you back, and obviously we can cover some other things in the future, but I just wanted to throw that question out there.
Sure. So there's two different ways that I answer that. So first of all, this is my process that I do every day. And so it's gotten second nature to me. So I'll try to explain it. But what I do is basically, this is one of the free websites that I use, sectorspider.com. And here are the 11 sectors within the S&Ps. So I just did that whole analysis very, very quickly for you. But what I do in my market research is I start by running my fibs on all of these charts, okay? Communication sector, discretionary, staples, energy. And then through that, I identify which sectors that I like for a buy and which sectors I like for a sell. So that's the first step. So I do the S&Ps, NASDAQ, Dow. NASDAQ's my favorite because it has, because of the technical levels, like the S&P has given back all of its gains on the year. NASDAQ has gotten hammered, but it is relatively stronger than the S&Ps. It's still up on the year. And then I go down to the sectors. So I run my fibs on the sectors. So for example, like healthcare is one of them. So I've been focused more, and Johnson & Johnson obviously was not helpful to healthcare last week. But I run my fibs on the overall sector. So I do have a buy point on the healthcare sector right here, which is 85.75 to 86. And so what I'm looking for is a shift in trend in the overall sector. And then I say, okay, well, there we go. We've got our trend shift coming in. Okay, great. Now let me go back to my sectorspider.com and say, and I know all of these by now, but you just go in here and you say, okay, well, let's look at the stocks within the healthcare sector. What are they? All right, well, here you go. These are your top 10. So I start off with these. And so then I go through and I say, okay, well, I know Johnson & Johnson got creamed, so we're not going to look at that. And then I go through the list and I run my fibs on these charts, and I'm looking for that filter of I want the trend, I need fib analysis, I want a squeeze, which leads me to United Healthcare. So I have in United Healthcare, number one, it's in one of the stronger sectors, and you know, healthcare is kind of bipartisan, right? So it's like, well, you know, I don't think it'll be too affected by anything that Trump is doing. If anything, it will have a positive impact because now we have the divided Congress. So the probability of him repealing the Affordable Care Act and all that is higher. So then I say, okay, well, what stock do I like? Okay, I found United Healthcare. I've got a weekly squeeze. So a weekly squeeze is huge. When you have something that's consolidating on a weekly chart, generally the daily chart's going to look pretty sloppy, but that's okay because I'm looking to trade it on a longer term basis. I have a weekly squeeze that tells me it's consolidating. I have a key area of support that comes in at 250 that can give me a good stop loss point. And I have earnings coming up in January. So typically, historically, you're going to see a run into earnings anyways on something like this. And you have a weekly squeeze. So like, look at this last weekly squeeze right here. Here's one right here. So you see how you have those red dots and then it changes to green? That's when the squeeze fires. So you want to be in the trade when it's in a squeeze, waiting until it fires. Here, here, and now you've got another one here. So that's what I'm looking to do on that. So that's how I identify them. I just do that whole process. I start with sectors, then I pick the stock. The other thing that I do is I have scans. So the scan that I like to use is, I mean, this is what it is. I'm basically looking for stocks that are at least $50. I'm looking for stocks that are within 10% of the 252 period high. And the reason for that is because I'm looking for the best in breed. I'm looking for the strongest stocks in the market that I can trade on an aggressive basis with options. So you're just trying to trade them for like 2 weeks. And that leads me to a couple of these, like O'Reilly is one of my favorites right now. So O'Reilly is consolidating into a weekly squeeze, but I really like it because it has this daily squeeze. So if you look at it on the daily chart, it is a little sloppy, but that's because, I mean, it's consolidating on the weekly chart. So we have a signal right here. Here was the last signal that we got. And it's holding up on that 50 period simple. I've got a buy signal there. I've got a target of 372. So for something like that, I mean, I could just set up a bullish butterfly on it for a target of about 370. Or just sell some premium on it. And then, of course, you know, you can always just trade the stock as well. But the auto parts makers have been doing very well in this market, while you see things like auto sellers just continually trending down. So I continue to like these for a 5-star setup, even with the volatility of this market. I mean, you can see that it's held up really well relatively. You can see that by the fact that it's held the 100 period simple. This is the 100 period simple right here. Sorry, I keep forgetting you guys don't know what my indicators are. And then this one is a 200 period simple. So most tickers, you know, have had a decline like at least 20% or more, a large variety of them in the S&Ps, and this has a lot of relative strength. So I like that. A couple other ones are Starbucks.
Yeah, we probably have another minute or so, or minute, 2 minutes. I do want to have time to bring the poll up so we can talk about that. And
yeah, sure. Go for it. Let me, whatever you like me to do.
Go ahead and finish on your Starbucks if you have one more that you know, that you really like. I think our audience would love to hear that.
Yeah, sure. So mainly right now, I like Microsoft. This is the larger list that I have. the larger scan list. AMT is one of my favorites right now. CME looks really good. McDonald's, O'Reilly, Starbucks. And then, most of these I would just look at it to trade on a shorter term options basis. But Microsoft in particular, Microsoft and United Healthcare are two of my favorites. Microsoft has a history of running up into earnings. So as an options trader, this is something that we can take advantage of in the options market because options premium increases going into an earnings report. So one of our favorite trades that we like to do is buy options on Microsoft about 3 to 4 weeks prior to earnings, and then take advantage of that rise into the earnings report. And then we like to sell our options directly before the report. So that's one trade that I like to do there. And I'm going to start getting into that one pretty soon. But I also do hold Microsoft stock. So I'm looking for a price target. I'm looking for a price target on Microsoft of about 120. Because I also have the consolidation on the weekly chart that I'm looking for that to break out. And I'm looking to trade that into about 120. It's had a little trouble at the 112 price point, but 120 looks like a good target for me going into the next earnings report.
All right, I do have maybe one final question for you. And you just said that you would get out before earnings. Is that, do you always get out before earnings if you're holding options?
Yes, because what happens is the IV crush comes. So basically what happens as far as options are concerned is you can buy options in advance of an earnings date at a normal price. Okay, like for right now, this United Healthcare, the date of earnings is January 14th. So what happens in the options market is the price of the options are going to increase going into that earnings date. The reason why is because that's volatility. So the earnings date brings volatility. And we know that as a fact, options prices increase going into earnings. That's just what happens. So you buy them prior to earnings, it increases going into earnings. But what happens is it gets to about the max point directly before the earnings report. So usually I trade the close in our trading room, and I will get out of those positions literally like 15 minutes before market close when the earnings report is that day. Because what happens is the price of those options increases. It goes up, 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 up. And then after the report, because they're increasing in anticipation of the report, after the report, they go down back to their normal price that they were 3 or 4 weeks ago because that event is now over. So if you don't sell your options before the earnings report, you will get hit by what we call the IV crush, the implied volatility crush, that will basically cream your options. So a lot of inexperienced options traders will come in and think it's a good idea to buy an option on a stock right before the earnings report. And that's another reason why it pushes them higher going into the earnings report. But that strategy really just doesn't work. So we try to take advantage of the pre-run.
Okay. Well, we are going to have to move on, but Tay, this has been a very enlightening discussion, and I know we're going to want to have you come back in the future if you've got some time.
Excellent.
But here is the poll that we had everyone take today, and it says 43% have never traded options. And before the show, I think you were saying that you just kind of went straight to options. You didn't really trade stocks. You went straight into options. Is that correct?
Yes, that's correct. My dad got me straight into trading options, and it's really just now that I started building a stock portfolio, actually 6 years later. So
Funny. That's a little different than probably what most people
yes.
stock market. But anyhow, it was a real pleasure having you on here, Danielle. And I hope, first of all, you have a great holiday at the end of this year, and Happy New Year, and come back and join us soon.
Thank you so much.
With 3 unique service levels and multiple data plans to choose from, StockCharts.com makes it easy to customize your account to best match your specific needs. In this video, we'll help you explore all the benefits of your membership by explaining our service levels, data plans, and pricing. Let's see how it works. To start, you'll want to choose from one of our 3 service levels: Basic, Extra, or Pro. Each service level represents a collection of features and options bundled together. If you're new to StockCharts, our basic service level is a great place to start. At $14.95 per month, Basic will allow you to create larger, more powerful charts and save them to your account. Next up is our Extra service level, the most popular choice among StockCharts users. At $24.95 per month, it includes all the features of our basic level, plus more saved chart storage and the ability to create custom scans and alerts. If you want it all, our Pro service level is for you. At only $39.95 per month, Pro includes even more storage for your saved charts, custom scans and alerts, as well as faster auto refresh, historical data, and much more. For all service levels, you can choose to subscribe on either a monthly or an annual basis. Our monthly renewal option is similar to most other web-based subscription services. You pay for 1 month of service at a time, and your account will simply renew automatically each month. With our annual renewal option, you prepay for 12 months of service and we'll give you the 13th month for free. If at any point you'd like to change your service level or renewal preferences, you can always do so from the Your Account page. Now that you've chosen a service level, let's find a data plan that works best for you. Regardless of service level, all StockCharts accounts come standard with our free data plan, which uses BAT's real-time data for the US and delayed data for all other markets. However, if you want to enhance your StockCharts experience even more, you can customize your account by adding official real-time data plans for one or more of the stock exchanges we support. Similar to exchange fees, prices for each plan vary, as they reflect the fees charged by the exchanges for your use of the real-time data. We want to make sure you have the data that's right for you, so our data plans are flexible and can be added or removed at any time. Keep in mind that all real-time data plans are billed separately from your service level subscription and always on a monthly basis. Unless removed from your account, data plans renew automatically at the end of each billing month. If you do choose to remove a plan, the change will take effect at the end of the month. All data plan charges are non-refundable. To explore all our data plans and update your preferences, visit the Your Account page. StockCharts.com gives you the charting tools and resources you need to invest smarter. And now with the flexibility to customize your service level, renewal cycle, and data plans, we make it easy to find the account options that are just right for you. Take control of your investing in just a few simple clicks with StockCharts.com. Simply the web's best financial charts.
Here's how to put a simple line on your chart without using the annotation tool. Let's say we want a line in here at 47.50. You can just drop down here into the overlays, pick horizontal line, add the price point, 47.5, and we're going to use a red line. We're going to make it solid and thick and hit update, and that blasts it into the middle of your chart.
You've got a problem. Your investments aren't growing as fast as you'd like. So you did a smart thing. You opened an online brokerage account and started learning more about the financial markets. But now you have a bunch of new questions, like, which stocks should I buy? When should I buy them? When should I sell them? You tried watching the talking heads on the financial channels, but they just gave you untimely advice that the real pros already knew about. It's all starting to feel a bit too little, too late. But what if there was a way to know, to truly know, what the market was thinking and how it was behaving, even before the pros? What if you could learn where the market was headed while there was still time to profit from that knowledge? With StockCharts.com, you can. Trusted by thousands of online investors, StockCharts.com has the charting tools and analysis resources you need to make smarter investing decisions. Our intuitive web-based tools make it easy to create high-quality financial charts in just a few simple clicks. Save and organize the charts you're watching to make managing your portfolio a breeze. And when it comes time to buy, our unique technical ranking system sifts through the markets and quickly points you to the most promising stocks and funds. You had a problem until you found the solution at StockCharts.com. Start your free 1-month trial today and see what superior financial charting can do for you. StockCharts.com, simply the web's best financial charts.